slides pulled up here. Yeah, without further ado, County Treasurer's Office. Thank you for being here.
So I'm Dardick. I'm the Director of Research at the Cook County Treasurer's Office. We formed the unit a little over 4 years ago. And the idea was to do studies on the property tax system, find the inequities in the system, propose solutions, and not just inequities, but other issues that arise that may make the tax system unfair. And so we've been at it for 4 years. You can go to cookcountytreasurer.com and look under the Pappas studies. That's the name of the treasurer, Cook County Treasurer Mary Pappas. And you'll see all the work that we did. The latest Chris study, I had the honor to edit it. But a lot of times, I came in to the research unit with a vision for what we were going to do and subjects we were going to tackle. This one, Chris, who's been with us about 3 years, brought to me. And I said, that's just a terrific idea, and it'll meld all your talents and it will further elucidate how property tax appeals affect the system and to some extent create inequities. So I'm just going to, stand by, and I'm going to let Chris, who's the master of this, present.
Okay, hi, I'm Chris Silber, researcher at the County Treasurer's Office. Thanks, Hal. It's my boss. Yeah, we're here to discuss our recent study about the Cook County property tax appeal system. Again, you might recognize this area on the map. It's the border between Oak Park and Austin. It's a pretty stark dividing line in the county. On the left is Oak Park, which is a relatively wealthy suburb with a median household income above $100,000. On the right is the neighborhood of Austin, which has a median household income of $40,000 about. And Oak Park is about 2/3 white, and Austin is about over 70% black and 20% Latino. So they're very different communities, but they're right by each other. What you see on the map is that there's also a stark disparity in how many homeowners appeal their property assessments. On the left, in Oak Park, over 64% of homeowners appealed their assessments when they were reassessed in 2023. In Austin, only 11% of homeowners did when they were reassessed in 2021. This is an issue that's really difficult to fix, but it occurs across the county. A stark difference in who's appealing the property taxes, and what that causes is disparities in how the appeal system affects what people ultimately pay when the bills come. So that was just a little intro, but we're going to talk more about what assessed values even are, what the appeal system is, and how that affects people's property taxes. And then we're going to get into our study, our questions going into the study, our methodology, our findings, and then potential solutions to the problems that we've brought up. And then hopefully we'll have some time for some Q&A. So, just some background. The property tax system is really complicated. Today we're focusing on a pretty early part of the property tax system, which is determining the value of properties in the county. So it's a really early part of the process, but assessed values ultimately determine what tax a homeowner or a property owner ultimately pays. So a property's assessed value is the value that the Cook County assessor gives a property to determine the share of property taxes that the owner must pay. It's a percent of the market value of a property. For residential properties, that's 10%, and for most commercial and industrial properties, it's 25%. The way property taxes work is that if your assessed value increases more than other people's in your community, you pay a larger portion of the tax levy in that community. So if someone's property taxes go down, another person's goes up. So it's about what share of the pie you get, basically. Every property is reassessed once every 3 years in the county, depending on where you are in the county. All of Chicago is reassessed at once. All of the suburbs north of North Avenue are reassessed at once, and then all the suburbs south of North Avenue are assessed at once in a 3-year cycle. That just repeats and repeats and repeats. A property can be reassessed out of this cycle if there's a major change to the property, like construction or demolition. So why are there appeals to these assessed values? Well, it's really hard to estimate the value of a property, especially when there's 1.7 million properties in your county. Assessors often lack information about properties that would help them determine values, and even if their models are really good, and the assessors' models have gotten a lot better over time, they're still models and they aren't perfect for every property. And then for businesses, income expense data can be hard to get and determine. So because these assessed values are estimates and they can be wrong, every property owner has the right to formally challenge that assessment with the county government. In Cook County, there are 2 opportunities to appeal your assessed value before it's finalized every year. First is through the Cook County Assessor's Office, and then it's through the Cook County Board of Review. The Assessor's Office determines initial assessed values and handles appeals on those initial assessed values, and then the Board of Review is an office independent of the assessor that its main job is to review assessed value appeals. So, like I said, the assessor sends out initial assessments of property, and then property owners have 1 month after that's sent out to appeal their assessment, with deadlines determined by township. And then assessor reviews those appeals and makes adjustments it deems necessary, and then it certifies those values. Then property owners have 1 month to appeal with the Board of Review, the deadlines determined by your property's township. And then the Board of Review reviews those appeals and might have a hearing with you, things like that. And then it makes decisions and judgments and certifies those assessed values, and those values are used to determine tax bills. So a real short diagram that looks like this. So there's the initial assessed values, assessor appeals, and then board appeals, and the assessed value that is used to determine tax bills. There are 2 other appeal routes that occur after taxes are sort of finalized, and they're kind of different. You can appeal with the Illinois Property Tax Appeal Board, or or you can file a formal tax objection in state court. But those are kind of different. Like I said, the resolutions come after tax bills are finalized, and they can take a long time to resolve. We're not looking at those for this study. We're focusing on assessor and board of review appeals for this study. In the past, a few issues with the appeal system have been brought up. In Cook County, a lot of people appeal, and you'll see this in a few slides. But the sheer amount of appeals in this county is probably more than anywhere else in the country, and that adds a lot of volatility to the property tax system, and it strains government resources because they have to do all those appeals. Prior reporting, particularly with the Chicago Tribune in 2017, showed that there are disparities in who appeals, particularly owners of high-value properties appeal more than other people, which causes inequality in the tax system. And then the Assessor's Office and Board of Review have had a lot of disagreements about particularly the assessment of commercial properties, where Assessor Fritz Kagi took office in 2018, and he raised a lot of commercial assessed values, which had been artificially low for a long time, but a lot of those raised values were then reduced by the Board of Review through appeals, and in part because of this fluctuation, well, that got cut off, but that's okay. In 2024, the county commissioned a study on the commercial valuation process in the county, and it found that the 2 offices weren't sharing much data or methodology information with each other. It was causing a lot of issues. And they also found that the commercial appeals process wasn't improving assessment uniformity. It made a lot of recommendations that the offices said they were going to do, particularly regarding sharing data and standardizing methodologies. So now, after that background, we can actually get into the study. Our office every year releases a report talking about how the property tax bills have changed in the county, where we look at property data for every property in the county and see, how and why tax bills have changed every year. Appeals are a part of this, but we didn't have a good idea of exactly how to quantify how appeals are shifting property taxes in the county. And so this study was to shed further light on that and to give taxpayers more information about that. So we had a few questions going into the study, pretty general ones. Who does and doesn't appeal their assessments? How successful are people who appeal at lowering their assessments? And then how do appeals change tax bills? And particularly we were looking at trends by property type, race, and income to get an idea of how this is affecting different people in the county. So we, our study time period is 2012 to 2023, which is the last 4 assessment cycles. We wanted to find what properties appealed and successfully appealed and how much assessed values were reduced in that time period. And then in the most recent assessment cycle, we wanted to go a little deeper and simulate how appeals shifted tax bills by looking at a simulation of what tax bills would have been if appeals never happened versus after appeals, to see how the appeals system is shifting what people pay and see who's paying more and who's paying less after appeals.
And that part of it is very unique. There's a lot of studies around the country that have documented regressivity in the appeal system. What Chris did here was, as far as I can tell, hasn't really been done before. And he took how those appeals actually changed individual property tax bills by town.
And then in the most recent assessment cycle, we had data on who appealed through a lawyer versus as an individual, and so we also looked at that data to see who's appealing on their own behalf or through a tax representative. So the data comes from a lot of different data sources, and most of this is actually public data, so you could go find it if you want. We started with our own office's property tax database, which just has information on every property in the county, its classification, where it is, that kind of thing, just the base level stuff. If you don't have access to our database, the assessor has a property universe database on the open data portal that you could probably use as a substitute. For assessment appeals, the assessor's office and board of review have all appeal information over the past 15 years plus on the open data portal to look at, which I used. I downloaded it directly from the open data portal for this report. And then for calculating tax bills, there's a lot of stuff that goes into it. Most of it is available for free on the clerk's website. Tax rates, agency levies, TIF data, and then this thing called equalization factors, which we'll talk about in a minute. I downloaded from the assessor's GitHub website, but that's also public data. And then finally, for demographic info, I used tract level census data from the 2022 5-year ACS. So the appeals data sets have a lot of things in common with each other. They're both at the property level, so each row of these data sets has data at the property tax year. So, and they have common fields that just have slightly different formatting about assessed values before and after appeals to the 2 offices, and whether they filed with a lawyer, things like that. The date ranges are a little different, and that partially determined what our study range was from 2012 to 2023. And some fields in the data sets were only available in more recent years, like filing through a lawyer or tax rep. I brought the data together by standardizing these fields in these 2 data sets and then joining them to our property table by PIN, which is the property index number of a property. It's a unique identifier, and tax year. And then once the data sets were together, I could calculate some combined fields, like whether someone appealed through either agency or both of them, if they had success through either agency or both of them, and then the total AV assessed value change. AV is short for assessed value, sorry, after appeals through both agencies. So this tax bill simulation is really complicated, but you have to do a couple steps to simulate a tax bill. You have to estimate the equalized assessed value, which is the assessed value times the state's equalization factor, which is used to sort of standardize taxes across the state, and then take out exemptions. And you have to do this before and after appeals. And then you have to take these equalized assessed values and recalculate agencies' tax rates, which is in general the agency's levy divided by the total EAV within the agency, which was mostly done through clerk's data. You have to account for tax increment financing districts in this because their taxes are calculated a bit differently. They have these things called frozen EAVs, and you have to recalculate TIF distribution percentages. But at the end of the day, I calculated tax rates before and after appeals. I estimated tax rates before and after appeals to calculate what the tax bills would be for every property in the county. Just a note, these are obviously simulations. They're not real tax bills, and they were made specifically for this analysis. And due to data limitations regarding like this equalization factor, we might have slightly underestimated the tax increase for residential properties and slightly overestimated the tax decrease for business properties due to appeals. That's just a data limitation in the study. There's more information about the exact methodology in the appendix of the full study. And then, like I said, we use demographic data from the census, particularly for median household income and tract race and ethnicity. I determine what census tract every property is in from the centroid of the property parcel. When I talk about low-income properties, I'm generally talking about places where the median household income is below $50,000 and high income is above $150,000. So just wanted to note that. So now we can get into sort of our findings. First, by property type, vacant, residential, business were the main groups that I used in this study. Residential is single-family homes, condos, and then small apartments like 2 and 3 flats. And then businesses are multi-unit apartment buildings, commercial and industrial properties. So businesses appeal at a far higher rate than residential properties across the county. Most appeals are residential appeals because they make up most of the property tax base in terms of just count of properties. But businesses accounted for most of the assessed value that was appealed. So they're the bigger bulk of what is being like contested is business assessed values. Over time, most people appeal through both agencies, but appeals over time to the Board of Review have increased for both residential and business properties, while appeals through the Assessor's Office have decreased by more than 25% over the past 3 years. So we are seeing differences in what agency people are appealing to. I just wanted to note that. In terms of what assessed value is changing over time, businesses successfully reduce their assessed values at a higher rate than residential properties, but particularly in the last 3 years, this assessed value reduction to businesses has drastically increased. From 2021 to 2023, almost 90% of the assessed value reduced through appeals was to business properties, which is a pretty big increase from the 3 years prior. And then in that same 3-year assessment cycle, assessed value reductions to residential properties actually went down a little bit. So most of the assessed value being reduced through appeals is to businesses, and that has a direct impact on property tax shifts. This increase in reductions was mostly through the Board of Review in this time period, where $17 billion in business assessed value reductions were granted in the past 3 years. So that is the agency that sort of caused this. Well, that's the agency that granted most of these assessed value reductions. So these reductions caused residential property taxes to increase by about $1.9 billion from 2021 to 2023, while businesses taxes were reduced by about $3.3 billion. The difference there is money that would have gone to the TIF district that was just eliminated from TIF revenue and nobody paid. The biggest, the region where these shifts happen is in the city of Chicago because of the huge commercial tax base in the city of Chicago, like right around here, where business reductions cause greater increases for residential property owners. Looking at a map of just like appeal rates on reassessment years across the county, you can see the difference between residential and business appeal rates. And then, well, that got kind of cut off, but that's fine. Residential is on the left and businesses are on the right. You see that in most of the county, appeals are causing a property tax reduction for businesses and a pretty big tax increase for residential property owners. And you might see some interesting things, specifically in the city of Chicago here, that we're going to get into. We're talking about residential appeals by income and race now, from 2021 to 2023. residential appeal rate in high-income communities is about 4 times higher than in low-income communities. So from 21 to 23, about 45% of the time a property owner in a high-income community had the chance to appeal, they did appeal. And that was only 11% in communities where the median household income is $50,000 or less. We see something similar with when you break it down by neighborhood, majority, race, and ethnicity, where in Black and Latino communities, people aren't appealing nearly as much as in white communities. Looking closer at race and ethnicity, even across income brackets, you see in Black and Latino communities that the appeal rates are just lower than they are in majority white communities. So I just wanted to note that as well, because of course in Cook County, which is highly racially and economically segregated, most of the low-income communities are Black and Latino, but even in higher income Black and Latino communities, the appeal rate is still pretty low. So these discrepancies have occurred across time of our study period. This is just like an anomaly over the past 3 years. This chart is every Chicago reassessment in that time period. And you see just a direct correlation between median household income and appeal rate in the city of Chicago. So these appeal rates directly influence how much assessed value is being reduced through appeals in the city, in Cook County properties, where higher income communities have a larger total AV change due to appeals. You also see a slightly higher success rate for appeals in higher income communities, where the success rate is about 44%, where in lower income communities that's 38 to 35%. So that's not a huge difference, but it's still there in the data. So these assessed value reductions directly influence tax bill changes in these communities. So all income brackets saw a residential tax bill increase after appeals because of those large business reductions we talked about earlier. But in low-income Black and Latino communities, they saw larger tax bill increases after appeals than in higher income and white communities. So we see that the appeals process is sort of disproportionately shifting the property tax burden onto homeowners who sort of earn the least money in the county, which is adding some regressivity to the property tax system. Looking at the different assessment regions, because of those large business reductions in Chicago, the largest tax bill increases after appeals are in the city of Chicago, and particularly in low-income communities, the tax bill increase after appeals is almost 20%. So that's a big part of people's property tax bills. Looking at how this looks on a map in Chicago, so on the left is census tract in Gage Park, which is a low-income Latino community on the southwest side, and then on the right is a high-income majority white census tract in North Center, which is on the north side. You see that just at the property level, very few people in Gage Park are appealing their property taxes every year. The appeal rate's only 5%, where in North Center, most residential property owners appealed their taxes in 2021 when the city was reassessed at a rate of 60.4%. So this influenced how much tax bills increased after appeals. It was still high in both communities because they're in the city of Chicago, but in Gage Park, the post-appeal bill increased about 23%, and in North Center, it's about 14.5%. And just real quick, I just wanted to add this, higher income and majority white neighborhoods have a higher rate of filing through a lawyer or a tax rep, but sort of interestingly, the success rate's lower when you file through a lawyer or a tax rep. There's a few reasons for this. First, lawyers and tax reps might solicit people to use them to file appeals, and they might not get strong cases when they solicit people like that. And then they might also handle more complicated appeals cases that have a lower success rate and might need to be handled in court or something. So these appeal rate disparities are pretty easy to see in the charts and maps. And there's a few potential reasons for this happening in the county. Low-income households might have a lack of time and resources to appeal. tax appeal firms might have less interest in soliciting business in those communities because they don't make as much money through successful appeals where property values are lower. At the same time, if your property values are lower, you might have less financial incentive to appeal, because even if you get an appeal reduction, it's not as much in terms of just dollars as an appeal reduction on a high value property. So that might play a role in the low appeal rate in low income communities. Low income communities also have less internet access. I know there's actually been some giant nights about broadband internet access before, but that's a real issue in these communities that might hinder access to the appeal system. And then in some cases, particularly when Chicago was reassessed in 2021, several low-income communities saw lower initial assessed values than the prior year, which may have caused fewer appeals in those communities, particularly Riverdale, Englewood, and West Garfield Park. So potential solutions to these disparities, it's a really hard issue because, especially about who appeals and who doesn't appeal, but reforming sort of assessment accuracy in especially the commercial appeals process might cause less shifts through appeal. And the assessor and the board of review sharing more data and methodology information and following the recommendations made by the commercial valuations report last year would potentially have a big impact on the appeals process. Improving the data available to the assessor's office could improve initial assessments and lower the appeal rate. Sometimes people who appeal might use bad data when they appeal, like poor appraisals, things like that, which is an issue the assessor's office raised earlier this year, and we think that it's something that the two offices should look into more. And then there's some other things where properties are reassessed once every 3 years. If they're assessed every year, it could lower the sort of sticker shock of looking at your assessed value increase every 3 years, and might lower the odds that someone would look at that and be like, I have to file an appeal for this. Just a more incremental tax change could help people a little more. And then, of course, increasing access to the appeal system in low-income communities would help improve appeal rates in those communities. But the countywide appeal rate's already so high that that's not necessarily a great solution to improving the appeal system as a whole. Circuit breakers, which are kind of like a tax refund or rebate, depending on where you are in the country, for low-income households that see big tax bill increases, could mitigate some negative effects of the appeal system, but it wouldn't reform the appeals process. I made a dashboard with all this data in it, which I really enjoy, and I wanted to share with you. It's on the Treasurer's website. It's made in Tableau, which the Treasurer's office uses a lot to analyze data. You can look at maps of appeals in your community and filter by property type, race and ethnicity, track median household income, reassessment year, and sort of view breakdowns by property type, household income, and race, sort of whatever you want to do. And then there's also tabular data that you can download at the community or municipal level. So well, we'll see if this works. I don't know if you wanted to go to North Chicago and look at sort of how appeals panned out there. You could look at appeal rates, maybe in the Chicago reassessment year, and see what the appeal rate is in that community and what ultimately happened to tax bills in those communities for these properties. You can view the breakdown by median income and residential versus commercial, that kind of thing, to really get into the nitty-gritty about your community if you're interested in that. And that's for the whole county, including the suburbs and the city of Chicago community areas. And then you can look at the census tract data if you hover over it and look at a specific census tract if that's what you're interested in. So yeah, I'm probably over, but that's the presentation.
And that's something that we did in the office, where we used to, before we had a real research unit, we would put out PDFs of data And it was our philosophy going into this that this wasn't the government's data, it was the people's data. So every time we do one of these studies, we will release everything behind it and cover check our work. We can use it for other purposes, we think, and I think Chris does a really wonderful job of presenting.
Questions now, so folks want to raise hands and put up a call.
Yeah. Am I just gonna pick?
Yeah,
Okay.
go ahead.
We'll start up over here. Yeah.
Wait, so when you say businesses appeal and they get their tax bill lowered, but then it has to be made up somewhere, how big is it, the whole county, or is it like a little group?
So every appeal affects every property in the county in even a small margin because we all share taxing districts. So if your piece of the pie of the Cook County government's property taxes are lowered, that's made up by everyone else who pays taxes to that agency. So if you share more agencies with someone who got taxes lowered, you feel more of that. But every appeal affects every property in the county in a small or large way.
How big is an agency?
It really depends. Some agencies are very small. Some TIFs are only one property. And then some, like in the suburbs especially, might cover a small community, like Fort Heights or something. In the city of Chicago, businesses affect Chicago residents so much because every Chicago taxing district, for the most part, covers the entire city. So think the CPS, City of Chicago, those kind of things, which make up most of your tax bill, are shared only in the city of Chicago.
So like they get lower taxes, we have to pay more, and then like when we tried to bring Chicago home and pay a little bit on the transfer tax, they all like rounded together and said no way, even though that's just a one-time thing, right?
Let me put some perspective on that to be fair to the business community, and that is that in Cook County, unlike any of the other counties in the state of Illinois, the businesses assessments are 25% of the county, residents are 10%. So, and homeowners get exemption that further lower the taxes. So, if you're a business with a certain value property, same as a home, say $1 million, that business is going to pay at least 2.5 times as much taxes.
So they're already paying a little more.
And recent studies have shown that our people in Chicago may shoot me for this, but the actual property tax burden in the city of Chicago, in terms of effective tax rate, is at the median of the country. It's kind of right in the middle. And the commercial taxes in the city of Chicago are among the top 2 or 3 guys in the nation. So I think this is what triggers business pushback to anything more. But those are specialized industries too that are pushing back at that. Real estate. Yeah. So, but I just don't want to paint the businesses as ogres. I suppose they can be in some cases, but you got to look at the reality.
But I mean, businesses are taking advantage of the appeals process far more than homeowners are, and they're seeing more benefits from it than homeowners are. So that's a real shift we're seeing about like whether like at the end of the day businesses are taxed more than like at the right rate and like residents are taxed at the right rate. I'm not really going to stipulate on that, but yeah, I mean, just looking at the appeals data, businesses are just far more successful at appealing. So, yeah.
We got a question from the chat. Why does Cook County have so many more appeals? Could there be any way to reduce appeals equitably, like maybe a % incentive not to appeal?
That's interesting. The incentive not to appeal is really interesting. Because I mean, like, there is a reason that appeals exist, right? Because these are estimated values. It's not like you're buying something at the grocery store and you're paying 7% tax on something exactly what you bought. You're paying 7% tax on some value that an office in the county came up with. You know, there's a reason that appeals exist, and that's a necessary part of the process. Why appeals are so much higher in Cook County versus other jurisdictions in the country, that's a really complicated question, because it goes into like trust in the government. It goes into, you know, a long history of the Chicago government maybe not doing things, you know, like I don't want to, like, you know,
as someone that's been covering this as a reporter or a researcher, there's extreme distrust in the city of Chicago. Everyone assumed for decades that when it came to the appeal system, fixers and pay someone off and take your assessment. And back in the day, and some truth to that. What happened in more recent years is Assessor Fritz Katie comes in. He does create less regressivity in homeowner taxes, so that you stop the high value homes from being under-assessed and the low value homes from being over-assessed. But then the appeals process had some regressivity back into the system, so he's not quite at the standards that you want to be at. But what's fueling the even bigger increase in appeals is the disagreement between the assessor who came in, and I was part of the Tribune study that, we found that under the prior assessor, who was the Cook County Democratic Party chairman, and that he had not been reassessing business properties for 2 cycles. In some cases, the property value stayed the same. So this assessor came in determined to fix it. Now, the board review would say he's gone too far, but the board review is a little more old school. They disagree on methodology, and this is really where the tremendous inequity comes in. Because if businesses, if they didn't have these huge disagreements and all that money wasn't being shaved off the business properties, you would have inequities, but they would not be nearly as stark. There's always going to be inequities in the appeal system. But this, because the amounts are so huge, it's having a real and significant impact on homeowners. Maybe I went into
yeah, read it.
I have a leading question, then I have an actual data question. My leading question is, can you describe a little bit why Illinois is so unique among states with not the number of appeals per se, but the number of offices that touch the property tax system?
Yeah. That's a very famous stat. Illinois, I think, has the most government units per capita in the country. This is one of the reasons taxes are so high in like Cook County and the state of Illinois in general. It's a big issue. It's a big statewide issue because a lot of researchers say that's why people leave Illinois, is because the taxes are higher than average, and the number of government units, so like the number of just like school districts, the number of like road improvement districts is just very high in this county, and that causes tax rates to increase because you have a lot of more overhead in terms of like managers and people who run the finances of all these little districts. I think the general idea is if we got those down a little bit, taxes would go down more. But that's a really complicated thing to actually do in practice because it just is. It's a really complicated.
Were you also talking about avenues for appeals?
Yeah, also avenues for appeals. Like, is it unique that Illinois has 2 different avenues on administrative appeals alone compared to other states? Like,
yeah, other states have less. You may know more than I do.
It's not a leading question, but no, my data question is an actual data question. Was there any evidence that there was some flag on senior freezes or senior exemptions that may be leading to lower appeals among homeowners in certain communities because there is already this sort of exemption that's knocking out a significant chunk of their value already?
That's a good question. We didn't really look at like homeowners exemptions or senior exemptions in particular. But I did find that if a senior didn't appeal, their property taxes remain pretty much the same because they have a frozen property tax assessment. That's a really good point. And a lot of residential communities have a higher percentage of senior homeowners who get those exemptions. So that's a good point and a good caveat to note about the data. So over here.
Have you looked at the effect of I'm going to call it compounding errors? You get a high assessment one time. The next assessment is based on the previous assessment. They're going to take some factor. And so if you're off here, then you're going to be off at the next one, and then the next one, and so on, unless you get an appeal and you adjust it. So
yeah,
Technically, the prior assessment shouldn't affect. I think you're right. I think it probably does. But technically, it's supposed to be the percentage of the fair market value at that point in time. But I do believe it's absent a downturn in the economy, it's unlikely that you're gonna come in and significantly lower their values.
I mean, the assessor does, especially for residential properties. I mean, every time your property is reassessed, the assessor makes a new model and reassesses your property, which I do want to note, and that's based on like sales data, and like with properties more similar to yours, like be playing into that. But that assessment does stick for 3 years. So if you appeal on that first year, which is why appeal rates are higher when your property is reassessed, that if your property value gets reduced, that lasts for 3 years. In that sense, we probably underestimated the tax bill shift due to appeals because we're only looking at 1 year at a time. But that's just depends on how you want to look at the data, I suppose. But even if you say every 3 years it's a clean slate, if you successfully appeal on the first year, you're saving more money than if you successfully appeal on the second or third year, which is a real thing. So I didn't want to note that. Business properties, one of the reasons they might appeal more every year is because their income expense data might change more often, like every year, especially around COVID, which like a lot of this data came in the wake of COVID-19, which really, affected businesses and residential property values a lot, and especially business income expense data. So
the thing is, technically when the assessor does the values are supposed to be for this last day of the year before. So it's in retrospect, so you should technically know. But during COVID, in business appeals are very different. I mean, a house is basically what, a house of similar circumstances in a neighborhood like yours, typically in your neighborhood, would sell for. But in a businesses sometimes sell for more or less because of the revenue that they're bringing.
Well,
so they have to look at it's a combination of the property share market value and the revenue that it's bringing in, and if you have a downturn, that building is going to sell for a lot less. And so retailers during COVID, offices, obviously, the value of the buildings.
One more question.
So this is great. This is so incredible. My question is about the differences in the methodologies between the assessor's office and the Board of Appeals with respect to residential properties. So you've mentioned the differences in commercial properties. I know the CCAO has done a tremendous amount of work to make their assessments more rigorous, carrying the code. What methodologies is the Board of Appeals using, and who are they accountable to in terms of how accurate their reassessments are?
Right. I mean, well, first of all, if you aren't even appealing with the board of review, they're not even going to look. So they're only looking at people who appeal, which is the first caveat I would make about how the board of review's methodology. For commercial valuations, we had the gift of a nice county study on commercial valuation process, where they really looked in fine detail at the methodologies of the two offices. I believe they're working on a similar study for residential. The property tax working group, which might shed some more light on that particular
There's
issue.
a lot less disagreement on values for homes. because it doesn't take in income. And then there's this complicated thing that they do with the business property, and it's called loading cap rate. And the cap rate is when your business, in many, many cases, your first or your second largest expense is property taxes. So once they determine, what the value is based on the income and expense and the location of the building and the size, etc., they then have to adjust what they believe it's worth for the amount of property tax. Now you could use it as a deduction from the previous year's income, the assessor, or you can load the cap rates, estimate what the property taxes would be going forward, and then build that into the cap rate, which is basically a measure of your profit over time in the business and how long it takes you to pay off the property. So the loading the cap rate is more standard, and the assessor, it's not clear from that study. I read it 4 times whether they're in agreement now or not. The board review will tell you no. The assessor would say, well, we are doing something that's essentially the same. But that is the biggest difference, loading that cap rate. That's the most important thing that could reduce the regressivity, to get them from being so far apart in the first place. They don't, and it is an appeal board. They can't exactly be colluding, but if they agreed on a methodology and data sharing, the board review gets a lot more data than the assessor by law. They could get a lot closer, and their regressivity significantly.
I also would note that the actual process of appealing is a little different in both of these agencies too. Usually in the board of review, you can get like an actual hearing with somebody or something like that, where maybe you have a better chance to plead your case, which isn't necessarily about the methodology and like assessing properties, but maybe if you have a more complicated reason for wanting your assessment lowered, you have a better chance with board review than the assessor's office. So I just wanted to note that too, even for residential properties.
I think we're out of time, but thank you all. Thank you for this presentation.